Hi, good evening, everybody. While we're waiting for Charles to join, I'm no longer going to paste the link for an attendance register. If you could just kindly place your student number in the chat for the attendance.
Good evening, everyone. Welcome to this evening session. I'm just going to give another 5 minutes or so for students to join. If I can ask you to kindly post your student number in the chat section, I would appreciate that. Then I'll see you guys in less than 5 minutes. Good evening, everyone. Just a reminder again, please post your student number in the chat section, and then I'm just going to give another 2 minutes and then I'll join. Please note this is the FAC2602 class session, not the 2601 session.
Hi, Charles. I see somebody has started your recording already. Thank you.
Thanks, Adele. Yes, I'm just giving another minute for students to join and then I'm starting. Thanks, Adele.
Thank Did you get the WhatsApp about the announcements?
I did, and I will go through it with the students this
I
evening, and
will
I will also post it on my WhatsApp broadcast message.
Thank you so much.
Thanks, Adele. Guys, we can start. Welcome again. I hope you guys had a good day, productive day, and hopefully you're not too tired for the session. We're going to hit the ground running and do as many questions as possible. So your participation will really benefit you. That's the only way you'll get exam ready, and especially for FAC. Well, all accounting modules, accounting and modules, you have to practice before the exam. There's no other way that you will understand the theory and the principles if you do not practice. So I eagerly implore you to please practice as much as you can. Don't look at the answers. That is the worst way that you can study. Attempt something, and if you want to go look at that section of the answer, go look at it. But please don't just look at the answer. That is not a way to understand the principle, because I can promise you, understanding the principle or knowing about a principle, understanding the principle and being able to apply that principle, they are far from each other. So you might understand and recognize a principle, but once you're in the exam, you will have no idea how to apply that. So please just bear that in mind. Guys, I'm going to take you to the next screen. There has been some updates to the points on the screen, so just bear with me. The first up is number 5. That one stays the same. There's still the voluntary WhatsApp group where you can send me your module code and your name, and I'll add you to the group, and then you will get notifications when there's additional classes. Whenever you log a query to have a one-on-one consultation with me, you can send me your name and notification to that WhatsApp number, and I will know that you have logged that query sooner. And I can already start arranging a time for us to meet. Speaking about the time for one-on-one consultations, guys, the spots are filling up rapidly. I was already last night was fully booked. Saturday afternoon is already fully booked, and Sunday afternoon. So, but we will continue to assist where we can. So, even having said that, please continue to send your details to that number, and should you request a one-on-one consultation, log that query and we will see how we can assist you. Then I just want to run this again. What has changed is note number 11. So I'm going to read you a few changes. You guys can just quickly pay attention to the following. I will broadcast it on my WhatsApp group on the WhatsApp over that WhatsApp number this evening after class. So you guys no longer have to click on the attendance register link. You can just post your student number in the chat section for attendance purposes. So please, if you haven't done so already, please post your student number in the chat section. With regards to the recordings of these sessions, the recordings will, a direct link to the recordings will be posted in this chat. So if you guys look at the chat that you are currently in, this is the FAC2602 chat. It never disappears. It will always be there. So you can, after the session, you can go back and look at the chats. So a direct link for this recording will be posted there. You no longer have to go through MyUnisa to locate the recording. Then we've spoken about the one-on-one consultations, but the links to the one-on-one consultations will also be posted in this chat section of this team. And you can click on that link, and then you must please use your MyUnisa student number and password to log the query. And the final point to please pay attention to is that I would really appreciate that after the session, if you can complete the feedback form. There will be a link to a new feedback form. If you can complete that, that will provide us with valuable information with regards to what we can add to these sessions or further assist you with, or how you found the session. So that'll just give us and myself feedback on the experience that you are having. So thanks for that. Any questions at this point? Anything that you guys would like me to repeat on what I've just explained? No questions. Okay, guys, just a quick reminder of how I usually like to conduct these meetings is we're going to be doing questions tonight. The questions I have sent earlier on in the semester to you, but don't worry about it. Those of you that don't have it, I will send it again. The question will be on the screen. I will give you an opportunity to do sections of the question, and then we will discuss it and move along. So it is important that you prepare for these classes. I mean, there's no specific topic, it's consolidations. So you have to work on your own. It is distance learning. So at this point, you must actually be the one telling me what you are struggling with. In these contact sessions, I follow a bit more structured approach where we will do the question, but we will do it together. So it's not just me throwing up the answers and just talking. So we will be doing them together so that you can see that if you make a mistake, this is the place where you want to be making that mistake, not in the exam. Because here you can still rectify that mistake and learn to better understand the principle, or maybe correct an incorrect understanding of what you might have had about the principles. So very important, participate. At the end of the day, these sessions can only be as beneficial to you as you make them, because we're really trying to make it as seamless for you to understand this topic. But you have to ask me ask me questions and tell me what you are struggling with. Otherwise, I will not know what I can do to assist you in maybe a different explanation. Trust me, there's more than one way to explain the same concept, and I'm more than willing to do that. Guys, so I'm just going to quickly unshare the screen and connect the tablet and bring up the question that we will be doing. So if you can quickly get your papers and documents ready on your side, I'm quickly going to connect, and then we will start the session. And if you've got any questions in the meantime, please feel free to ask. I'm still listening. Oh, and just another thing, just remember, no one is saying that the answer that I'm going to put up on the screen or the way I'm doing it is correct. So if you doubt something, don't ask. I promise you, everybody makes a mistake, and don't be scared to highlight something that you think I might have done incorrectly. I would actually appreciate it. Okay, last week we did, from what I could see from the notes, we did question 2. Just want to double check on that. And I asked you guys to please complete that, and then you were welcome to send it to me. I didn't receive anything back. Just a quick question. Yeah, it was a quick class question. I didn't receive anything back, so I'm assuming that everybody was happy. If you still want to send information or your answer and the rest of the question, you are more than welcome to do so. So we will be focusing on question 3, 4, and 5 this evening. Just want to share the screen again. Okay, I'm sharing the screen. You guys should be able to see the screen. Guys, I'm working on more than one monitor on my side, and the Teams screen is not on the two main monitors that I'm working on. So if you have a question and you raise your hand and you see me not paying attention to that, please unmute and ask the question. Ask me to stop there and explain. I will gladly do that. So don't let that hinder you. Might not always see the hand go up. So before I put up the question, guys, remember in FAC2601, 2602, we're doing consolidations where 90% of what you're going to be doing is a recipe. They follow the same path. So you know that you're going to be given information that indicates a relationship between two companies, and you determine whether that is a parent or parent and subsidiary relationship. Because if it is a parent and subsidiary relationship, we need to consolidate. Okay, so if we consolidate, we first need to pay attention to three various stages of consolidation. The add date of acquisition, the date on which we acquired the interest in the subsidiary, the since date, the since at to the beginning of the current year, and then we want to look at the current year. Because all eliminating steps that we need to do, or any transactions that we need to eliminate, intergroup transactions that we have to eliminate, will happen in different ways at each of these dates. Okay, because remember, at date of acquisition, we are not interested in anything that happened before. We want to know what happened at date, and we want to eliminate equity, we want to eliminate the investment. We want to recognize NCI if it's not 100% controlled. If the parent doesn't control the subsidiary 100%, then there will obviously be a new section that we have to include in the group's equity structure, which is the non-controlling interest. We don't have ownership of that 25% or whatever percentage, that small percentage that we do not have. If I have, if the parent has got 75%, the NCI will equal 25%. We do not have control over that. So that will be a non-distributable section in my equity category in my statement of financial position. So we want to recognize that at date of acquisition, and then obviously determine if there was goodwill. Did we pay more? Did the parent pay more for this investment than what this investment or this subsidiary's net assets was worth? Because remember, that is what we essentially buying. We are buying that subsidiary's net assets, which is also equal to equity. So if we pay more for it, we recognize goodwill, which is an asset. Goodwill is always an asset. Then in the since date of acquisition to the beginning of the current year, if we have to eliminate anything, it will be done through retained earnings. Because what is retained earnings? Retained earnings will be your profits of prior periods. So retained earnings we can recognize from date of acquisition. is the one that we need to do. So we need to recognize and also eliminate unrealized profits, if applicable. And then obviously in the current year, we'll be looking at the profit or loss. Because in next year, this profit or loss will go to retained earnings. Any questions so far? So the steps. Firstly, determine the shareholding. That the parent has got in the subsidiary. You first need to determine that. The second thing is you need to determine, are there any intergroup transactions? That we must eliminate. And then thirdly, we add all other income, expenses, assets, and liabilities together. So if there were absolutely no intergroup transactions between these two companies, we would have just added everything together except equity. We would have created the NCI and we would have kept the parent's equity. Why? Because we've eliminated the equity at date. We've eliminated the shares and that retained earnings, and we calculate the retained earnings that must be added to the group's retained earnings since date of acquisition. Any questions so far? So let's start with, I already marked question 3. Let's start with question 3. Okay. Exam technique, you always go to the required first. And in the required, you pay very careful attention to dates and what they want and for when they want it. So here we see that they say, draft a consolidated statement of financial position of Cape Limited and its subsidiaries at 28 February 2015 according to the requirements of the Companies Act and the generally accepted accounting practice. Ignore comparative figures and the taxation effect on unrealized profit and losses, as well as capital gains tax, that you can ignore. Then they say, do the consolidated journal entries at 28 February to eliminate the profit and depreciation associated with the sale of the machine. That's the only journal entry that they want. And they only want the statement of financial position for that date. So it's important to read the required and make very sure that you understand what they want and for when do they want it. Because dates can easily confuse us. So what I would like us to do first is I'm going to put up that section. I'm going to minimize it a little bit. Tell me if you guys have trouble seeing it. Eliminate a little bit more. Can I ask that you guys please calculate for me the interest that the parent has in the subsidiary? The information is in the statement of financial position that's given and in point 1. I'm going to give you 2 minutes to please calculate that, then I'll explain. So yeah, guys, if you are done, you can just put your hand up and then I'll know who's done and who's not yet done. If you have a question, you can just unmute your mic and ask.
Hi, Charles. I think the interest is 75%.
Okay, let's see what the other students get. Let's give another minute. Thanks for that. Anybody still need some time? How did we get the 75%?
Yes, we got it.
Hey?
Yes, we got it.
100%. So let's calculate the interest, number 1. So they say the ordinary shares of Port is 100,000. They are 2 rand a share. That means they are 50,000 shares. And they say that investment in Port Limited that Cape has is 37,500. So it's 50,000 shares, so 37,500 over 50,000 gives you 75%. Everybody happy with that?
Yeah.
The next thing that I would like you guys to do for me is to prepare the at date journals. So at date, we'll do it together. We have share capital of Port being 100,000. Let's do this and see if you guys can't. You guys can just say if anything is too small, and so I'm trying to see that you guys can at least view everything that I'm doing. Okay, so we can see 100,000 Rand. Then the next thing that we have to do is the retained earnings. So let's read number 1. Cape Limited acquired its interest in Port Limited on the 1st of March 2012. At that date, the retained earnings of Port Limited amounted to 64,000 Rand. So at date of acquisition. So at date of acquisition, the retained earnings 64,000. Then they say there, on that date, the property of Port Limited was revalued at 200,000 Rand. That is extremely important that you guys understand what that means. It means that Port revalued the land and buildings just before consolidation took place. In other words, there's a reserve that they created, a revaluation reserve, because remember, any revaluation reserve forms part of equity, and we said eliminate equity. So the revaluation surplus is 60,000 Rand because there's a movement between 200 and 140. Revalued at 200, and it is currently valued at 140. Everybody happy? Okay, I assume everybody's happy. Guys, just apologies. I see they printed the question a bit skew, so you must just align a bit. So 60,000 Rand. So that we must all debit. So that's in the debit column. Credit. What do we need to eliminate in Cape's books? We need to eliminate the investment. And we paid how much for that investment? We paid 180,000 for that investment. So we will say investment. Because remember, an investment is an asset, and an asset decreases on the credit side. So after I'm done with the journal, all my debits and my credits should balance. With what am I out? By looking at this debit, the debits and the credits. By what amount am I not in balance?
There's 44,000 difference.
Is there anything that we could not have, that we might have missed, that we didn't take into account? Hey, Sally.
Yes, it's goodwill.
We've not taken into account two things. We've not taken into account goodwill, which
And
if
NCI.
they are goodwill, it should be in that. Look where I'm drawing it. We've not taken into account NCI. If there are NCI, it should be under credit, and I've not taken into account goodwill. If goodwill is there, it should be in the debit side. But let's first do the NCI, because that we can calculate. The NCI is what? 25% of that. The at date of acquisition, equity. Because on that day that we acquired an interest, only 75% of net assets became ours or became Cape's. The other 25% stayed with the minority shareholders. So we cannot say that that 25 is ours. We need to create a separate line item in our statement of financial position under equity called non-controlling interest. So what would 25% be of that?
56,000.
Thank you. So now if we balance and we count, we add up, we see that we are not in balance with. What's the difference between that 44 that I couldn't see who mentioned it, but what's the difference between 44 and the 56? $12,000. You guys happy? Let's open the analysis. Okay, the analysis, remember, it's always the analysis of the parent, because we want to see what part of what we bought is ours throughout the term that we had the controlling interest. So we will say the analysis, and we will have a total column. We will have an at date of acquisition. We will have a since date of acquisition. We have NCI. And this is the parent. 75%. The NCI at 25%. Everybody happy? And what are we eliminating? Eliminating the share capital, 100. We are eliminating the retained earnings, 64. And we're eliminating the revaluation reserve. Of 60,000. Okay. What percentage went to the parent? Only 75%. And NCI got 25%. Everybody happy so far? If we total that, we get those amounts. Now we need to say, what was the investment that the parent had in port? Investment in the subsidiary was 180. And therefore we would have we recognize goodwill. And now if we go back to our journals, that's exactly the amounts that we got. So that's why the analysis is also very important in understanding consolidations. You need to understand how to use your analysis, but very important in the exam, don't waste your time on the analysis. If you are quick at it, then you do it and you get your marks for it. But don't let it confuse you. You need to understand why you are doing it. So if you are struggling with why you are doing the analysis, please make use of this opportunity and let me know, or we can arrange a consultation and we can thoroughly discuss why it's important that you need to understand. So there's the add date of acquisition. We have the 180,000. We have the 56,000 of the NCI. We have the 12,000 goodwill, and we have all three of the equity items. Any questions so far? Okay. The next date that we will be looking at is the date of acquisition. And now we need to interpret what is the information that they give us. So let's go to the information and see what is given. So we've done with number 1. Number 2, they say on the 26th of February, Cape Limited mailed a check of 20,000 to Port Limited. Port Limited received the check on 6 March 2015. So would that check have been included in the cash in bank of Port? Guys, are you still there?
Yes, sir.
Yes,
we are.
we're still
Okay, thanks. So if Cape Limited mailed a check to Port Limited before year end, it means it won't be in the cash in bank of Cape. But will it be in Port? Port only received it after year end. So no, it won't be, because at year end, they didn't have that check yet. Let's leave the analysis a little bit there at the top, and let's start our statement of financial position as at 28 February 2015. What are we dealing with? 2015.
2015.
Okay, and we are dealing with the yeah, it is the, so we say Cape Limited and its subsidiaries, and it is the consolidated. Always remember to get your names right. Statement of financial position as at 28 February 2015. Okay, what do we normally have? Assets, and under assets we will have non-current assets. I don't know what's in the question yet, but I'm going to leave, say, 3 lines open, and this is another exam technique of how to complete a statement of financial position. You already know the structure. You do not need to know what will go in there, but you need to know what the structure looks like. You can waste a little bit of space. So I would normally say leave about 4 lines open, and then you have your current assets. Leave another 4 lines open. Then you have total assets. Then you leave maybe a line open, and then you know the next section is equity and liabilities. Under equity and liabilities, we go to the equity section, and there we can leave another 4 lines open. Then we have non-current liabilities. Leave, say, 2 or 3 lines open, and we have current. And there you have your layout. We already have the skeleton of your answer. So let's go to the information. There's property plant at valuation, plant at carry amount, investment, and loan. And then we have bank, and the information is a bit skewed there, but we'll correct it now. And we have trade and other receivables. So if we let me put this side, then we can have look at it both. So under non-current assets, there will be property, plant, and equipment. There will there be investment? No, it's eliminated. Will there be a loan to Cape? No, because if I do the consolidated statement of financial position, I'm talking about the group, and the group can't owe itself money. The group can't own an investment in itself. So that's why we eliminate investments. We can't add it together because it's an asset that we have in ourselves. We can't. The same with the loan. We can't have that. So that we won't have. But what we will have is goodwill, because we've already done the analysis and we know there was goodwill. And goodwill is a non-current asset. Then on the current assets, we know we have inventory. We can see there's inventory. There's trade and other receivables, current asset, and we have bank. And bank is usually grouped under cash and cash equivalents. And that will give us our total assets. So our skeleton is taking shape. So now let's go to the property, plant, and equipment. And now we need to read the information. So the information at number 2, let's take that into consideration. They say that on the 26th of February, that check was sent to Port, but Port didn't get it yet. It was received after month end. So we need to know that if I add up cash and cash equivalents, I need to take into account that 20,000 Rand. You guys still happy?
Yes.
So let's look at the bank accounts. So we have the bank here. Bank is 80,000 for Cape. So let's go put it in there. 80,000 plus that 20,000. And now let's see what is it for Port. For Port, had a bank, had an overdraft of how much? It's the last one on the list, so it's a bit skew, but it's the last one on the list, so it should be 70,000. Everybody still happy?
Yes.
Let's look at trade and other receivables. So we've done note 1 and we've done note 2. Note 3 speaks about machinery. So we know it's got nothing to do with trade and other receivables and inventory. So trade and other receivables, we have to go look at what they say. Trade and other receivables is the 48,000 and the 10,000, because that line just pushed it off. So 48,000 is under Cape and 10,000 is supposed to be under Port. I don't know what they did with the question there. Guys, just remember you have to turn off your video, otherwise you're gonna eat all your data. Guys, I see hands that's up, so if you've got a question, you guys can just unmute and ask, okay?
All right. Charlie, Sally,
Yes.
I wanted
Sally.
to ask, hi everyone. I wanted to ask on the 70,000, isn't it supposed to be on our current liabilities as an earned income or accrued expense?
You are 100% right, and you wouldn't have been marked negative if you did that. However, since we are consolidating,
all right.
There are conditions where we can add, offset. But I would recommend in the exam to put it under current liabilities. You wouldn't have lost a mark. You wouldn't have also not have lost a mark here, since we are consolidating and we are assuming that they have the account at the same bank.
Oh, okay.
Just remember there are conditions under which you can offset, but in most cases, and that's only when you deal with financial instruments. So cash and bank is a financial instrument, but in most cases you never offset. So if that was the case with trade and other receivables, that there might have been an item in there that relates to trade and other payables, then you would not have done offsetting.
Oh, all right. So is it always the case that it's always going to be like this, or do they somehow mention that let's say the parent did say they're gonna pay it on behalf of the subsidy?
Yeah. So just on to correct that part, they're not paying it on behalf of the subsidiary. We are just putting it together for disclosure purposes. So. Yes, but Sally, I'm just emphasizing one thing. Your point is very valid. You would not have lost a mark if you put it under current liabilities.
Oh, all right.
Because the general assumption is, of the general rule is that you do not offset. However, when you work with financial liabilities, you can offset under certain circumstances.
All right. Thank you.
100%, but well spotted. 10,000 plus the 48,000, and then inventory. They don't say anything that we are purchasing inventory. Okay, see, we haven't read everything, Sally. There they say, Cape Limited guarantees the bank overdraft of Port, so you can offset. That's one of the conditions for offsetting.
All right. All right. Thank you.
So point number 3 speaks about a machine. We are not dealing with the machine here. Point number 4 declares a dividend. We're not yet there, and that dealt with the bank. So inventory we can just add together. There are no intercompany transactions when it gets to inventory. So let's go to inventory. Inventory, if I look at it correctly, is, I put that back, it's 100,000 and 140,000. Goodwill we know is 12,000. So let's quickly focus on property, plant and equipment. So what is important at point number 3? What is important that you need to always take into consideration there?
Sorry, I don't see this inventory of 140,000.
Inventory 140,000. That inventory is just supposed to be moved up to the left. There was a problem with the spacing. So inventory is 140, and then the very next line is the 100,000 rand. That should have been where the 140 is. So it's the 140 plus the 100. I'm not sure
Okay,
who
thank
asked the
you.
question. Oh, Dicky Lady, are you happy? Okay, 100%. Guys, when we deal with, where's my pen? When we deal with a company where we have, say for instance, now in this case, we have Cape. Let's look at the machinery. We have Cape, and Cape owns 75% in Port. Okay. Cape is a company on its own. Port is a company on its own. Cape and Port can sell to each other in any way or whatever they want. Okay. But the moment that you consolidate in that bubble, you cannot have intergroup transactions. So if in this bubble, if Port makes a profit on something that he sells to Cape, or Cape makes a profit or a loss that he sells to Port, then it's called unrealized. Meaning it's locked in the bubble. The group, that whole bubble, you can't make profit in that bubble. It's like your left hand is making a profit from your right hand, or your left hand owes your right hand something. That doesn't make sense. But the moment that this bubble sells outside the group, then profit gets realized. Does that make sense? So let's use as per my previous examples, if we use inventory, for instance, if Port sells to Cape and there's a profit of, say, 2 Rand on them, and Cape Limited adds on that another costs and whatever, and he adds another 3 Rand, and then he sells outside, it means that the group made a profit of, let's say Cape adds 3 Rand, and that means the group made a profit of 3 plus 2. But now the 2 is the one that realizes. Does that make sense?
No.
Who's I didn't hear that properly. Did you guys say it doesn't make sense?
Is the 2 added to when you're selling to Cape? When is
Yes.
the 2 added, or when you're selling out? Okay,
So,
you
okay.
realize it once it's been sold out.
Let me draw a better picture. Let's draw it like this. Cape is here. Cape owns in Port. Okay. This is the group. So what you first must realize for me is that you sit here with 3 sets of Fs. annual financial statements. You sit with Cape because Cape can have its own set of financial statements. It's a company on its own. It will have its own, in practice, that's how it works out there. Cape will have its own annual financial statements and will report on its own. Port will do the same, but then there must be a third set of financial statements, which we call the group or the consolidated annual financial statement. And it's at group level that this whole thing of unrealized profit and you can't sell to each other, that's where it comes in. Only at group level. Okay. But on their own, Cape can sell to Port and Port can sell inventory to Cape. So say for instance, Port is a forest or owns a forest and he does woodwork with the trees that he chops down, but he just manufactures the raw material, the wood sheets. He ships it to Cape. So this Port makes let's say wood sheets, and Cape makes furniture. Okay, Wood sells to Cape and makes a profit of R5. So let's take out this arrow, and he makes a profit of R5. Where is that R5? It's in the group. Do you see that?
Yes, sir.
So because it's in the group, it is unrealized. Because I cannot realize it, I cannot recognize it, because I cannot, for the group's sake. Remember, this is only for the group, no? I cannot make profit in myself. In the separate financial statements of Port, he will realize that R5 in his separate financial statements. And in its separate financial statements, Cape will recognize the purchase. But when we do that third set of financial statements, then we consolidate. So you guys can see on the screen, we have the financial statements for Cape and we have the financial statements for Port. But now the question asks us to do that third set of financial statements, the consolidated set. And then we must have a look, but wait, if we are looking at these two companies as one company, then certain things need to be eliminated. When we look at these two companies as one company, I cannot make profit in myself. I cannot owe myself money. I cannot have an investment in myself, all of that. We must eliminate those items, those eliminating factors we need to take out. Otherwise, we will not sit with an accurate asset value, liability value. Our numbers will be completely skewed. Everybody with me so far? Before I take it further. Okay. Now Cape, we go to Cape. Cape makes furniture. So Cape takes whatever it paid Port for the wooden sheets, and he manufactures furniture, he adds cost and whatever he does with it, and eventually he sells it to a third party, an outside company. In other words, a company not related to the group. He's not part of the group. Only now it is as if Port sold directly to that company. But he didn't do it directly, he did it through Cape. Cape bought it. Then Cape made furniture. and Cape sold it. So only once Cape has sold it does it realize. And Cape adds, say for instance, another 3 Rand to it. So when we leave, we can now say we are now realizing a total profit of 8 Rand. But only then. Up until then, that 5 Rand needs to be eliminated. Okay, does that make sense?
Yes, sir. Yes, sir.
100%. So if you guys still struggle with that way of thinking, please arrange a consult with me and I will use other ways of explaining it. But for now, this is an inventory example. What happens now if we have a machinery example? Or let's say machinery. We still have Cape. We still have Port. And we still have this shareholding of 75%. So Cape is a company on its own. Port is a company on its own. And the question asks us not for the individual statements, it asks us for the group. But now we're not selling machinery, we are selling inventory. We are now selling machinery. So let's go read what machinery did we buy. Let's use this example. Cape Limited, so let's go to the drawing. Cape Limited sold to Port. He sold machinery. Okay. And he made a profit. He made a profit of 20,000 Rand. Let's say he made a profit. I'll just get some space here. Of 20,000 Rand. So this is still within the group. You can't make profit within yourself. So that profit will become unrealized. But what's the difference between that profit? How will that profit leave the group? How will that profit leave this block? Hey, Sally.
Yes, from the way I'm understanding it, I think at one, we're gonna have to look at when did we sell, when was the sale made? And once we discover that, only then can we know that does it affect our retained earnings at the beginning or currently?
Yeah, definitely. So they say they did this transaction on the 31st of August. So that's within our current financial year, the one they want us to consolidate. But being that as it may, how would that 20,000 Rand leave the group? There's two ways.
Oh, yeah. Sorry.
Yes.
Oh, and that way, I think we're gonna have to eliminate it on the pro forma, what is it, consolidated journal entries. That's where we're gonna have to eliminate it.
We are definitely gonna at first we eliminate the full 20 because it's unrealized. We will park it as unrealized profit. But how will we realize it? We will realize it either through sale. So if Port suddenly decide he no longer wants that asset and he sells it, then that asset leaves the group. Or through use. In other words, depreciation. So that value will slowly diminish through our depreciation, because they say we are going to use this asset. They say that the group provides for depreciation at 20% per annum according to the straight line method. Any questions so far?
No, thank you.
Okay. So let's look at that depreciation. The depreciation is 20,000. The profit is 20,000. What is our depreciation rate? 20%. And we did that transaction. We acquired, or Port acquired, that asset from Cape on 31st August 2014, meaning within 6 months of the year. What does that equal to?
I'm sorry, I didn't get that.
It's
Could you please repeat that?
2,000.
4,000.
It's 4,000, and then you apply half the year, and then you get
It's
2,000.
It's 2,000.
Okay.
Everybody happy?
Yes.
Yes.
So the first thing that we need to do is that we need to realize that our profit reduced with too much depreciation. Everybody agrees. But because we made a profit, our overall profit has been overstated in the depreciation account expense. So let's look at our profit and see how that would have affected it. What did they say here is our profit? They say here at the bottom, number 1, sorry for the scrolling, we got this percentage on 1 March 2012. So so we need to determine the retained earnings. Retained earnings since date of acquisition. What was my retained earnings on date of acquisition? $64,000.
Yes.
Any questions? Okay. It was 64,000. What is the current retained earnings? $192,000. Everybody happy?
Yes.
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 Okay, you guys happy? So
Yes.
it's
Yes, I am.
192.
Yes, sir.
192 and
So what's the movement?
64,000.
So what's the movement? Let's say there, retained earnings. will be the difference between the 192 and the 64. Everybody happy?
Yes.
But do you guys agree that we need to do certain adjustments? Hey guys?
On
Adjustment on what?
On that retained earnings.
Yes, we do.
Uh, mm, won't be before unrealized profit on the sale of machinery.
Definitely. So how are we going to do that? So we say capes. Capes, retained earnings. Let's work with cape first. Cape's retained earnings is 192. So why did we say 192 there? Aren't we working with port? You see, guys, how easily we can make a mistake. Let's go back to Cape's retained earnings is 192. And yes, as you guys have said, we must make certain adjustments. The very first one that we need to do is the profit on the sale of the machine. And that is 20,000. We can't recognize that profit. We need to deduct it. Is everybody happy with me there? Is everybody in agreement? Makatane?
Yes, Charles. So we have to deduct it from Cape's retained earnings. Sorry, I'm fighting with my chest here today.
Shame, Makatane. Okay, no questions for you tonight. You always answer. I can hear someone stole your voice.
No, it's okay. Thank you so
much. No, I won't ask you a question tonight. You can rest your voice tonight.
My voice, yes. Thank you so much.
Okay, so we have to take out the profit because we haven't earned it yet. But remember what I said here when I did this picture. That entire profit is unrealized, so we take it out. But we will slowly realize it in a different way. Through depreciation. Because when I calculated my initial depreciation, each one of these companies, do you guys agree with me that Port would have recognized depreciation of 2,000 Rand too much when you look at the group's point of view? Because Port would have correctly calculated depreciation, including the 20,000. But the moment that you look at it from a group's perspective, you can't make a profit in yourself, and then and since you can't make a profit in yourself, that means the depreciation expense that you calculated on that profit that you can't realize must also be added back. Because remember, we deducted the depreciation. Now we need to add it back. So we say depreciation, 2,000 Rand. You guys happy with that? Sally?
Yes, sir.
Levi, was that you?
Yes, sir.
Yes.
It is Levi,
Yes,
no?
sir.
Yes, it is
Yeah.
Levi.
Okay. Okay, so depreciation, we add back. Now we all need to remember that if we do work with a consolidation with a group, that obviously the last part that we can add to retained earnings is the NCI, or let's say the consolidated, not the NCI, consolidated retained earnings. So what is the consolidated retained earnings? I'm quickly going back to the Excel document. I'm just going to make it big so that we can see everything nice. So there we've calculated the 100,000. That goes to the since column. Also still 75% and 25%. So if we do totals, that will be the total for the NCI in the statement of financial position. And this will be the consolidated retained earnings. So I need to add that to Cape's retained earnings, and this is for the group. So if I add that up, what do I get? What do I get? 249,000. 249,000. Everybody happy?
Certainly.
And that is the amount that goes to my statement, consolidated statement of financial position, to equity and liabilities. Under equity, I will have share capital. I will have revaluation reserve. I will have retained earnings. And I will also have NCI. Yes, Sally.
Yes. Charles, I wanted to ask, right? Many a times when I was practicing, I noticed from the revaluation part,
Yes.
what I'm failing to understand is how are they differentiating it from revaluation surplus, reserves, and other components of equity? And yeah, how does it work out, the whole thing actually?
Okay. Sally, the best explanation I can give you there is by showing you the same. They deal with it the same way almost as cash and cash equivalents. Why am I using that?
Okay.
Cash and cash equivalents is a group name. So cash and cash equivalents consist of bank, petty cash, float, anything that is
Yes.
cash equivalent. So instead of listing, I'm just listing their revaluation reserve for explanation purposes. So it would have been more technically accurate to say the other components of equity, as they have done, I think, on the question. They might not have do it there the same way. But yeah, be that as it may, you can say other components of equity. And then under other components of equity, they group general reserve, revaluation reserve, and other equity reserves.
Oh, all right, all right.
So it's just it's a group name.
All right, thanks.
Okay, so this I'm just showing the real or the full name to show that what it is that I put in there. So retained earnings we calculated, and we got 249. Revaluation reserve, I think, was 100 on the question paper, because we're only looking at the equity of Cape, the parent. We've eliminated that other 200,000 rand. Share capital will only be the share capital of the parent, because we've eliminated the share capital of the subsidiary. NCI we calculated at the top is 81,000. Everybody happy where I got that?
Yeah.
Most definitely.
Okay, 100%. Then we have non-current liabilities. So let's quickly have a look at non-current liabilities. I'm just going to make this a bit bigger. Just make this a bit bigger. We have long-term borrowings is 200,000. So let's go put that, let's say the long-term loan. So let's start with the 200, just so that we know we have it. Then there is a loan to port of 164,000. Okay. So plus 164, it's ports loan. There was nothing else that I feel that should have been eliminated there. So if we add that together, we get 3, 4, am I right? Just want to double check here.
Sorry, Charles.
Yes, yes.
This loan to Port, is it for the group or is for his? Does it need a journal entry for that?
I'm also looking now for that it might be an elimination, but this information is so skewed on this paper. I don't want to make a mistake, but you're absolutely right. That is what you need to look at, because I'm now looking at assets, and assets port might under port's name they should be they should actually eliminate what the loan is. Like I'm struggling to follow inventory.
It's 40,000.
It is?
The loan for Cape, it's 40,000.
Okay,
And
that
then
one.
just below, you have the inventory, which is 140
Okay.
for Cape and 100 for Port.
Yeah, sorry, this lines I don't know why they made this error in the printing, but yes, 40,000, it must be eliminated. Then it will be the 200 plus the 164 minus the 14. Let's just double check. There's another loan here to port of 20,000. What should we do with that? So that one we minused, so we must add this one back. Everybody happy? Everybody happy? Guys, just before I forget, remember to please post your student number in the chat section of this group. Don't forget to do that, please.
I think, Charles, for me, if you can just repeat this part of the loan, the other one, and this 20,000.
100%. Okay. So if you look at the information, let's put the information back on. It says that Port Limited had a loan. It borrowed money to Cape Limited. You still happy? It borrowed money to Cape Limited. And on the other hand, Port owed Cape 20,000. So if I have to draw it like this, let's look at the loan. And we put Cape here and Port. So Cape borrowed from Port 40,000 Rand. And Port, on the other hand, to Cape 20,000. What's the net movement? So Cape owes Port 40 and Port owes Cape 20. So if we look at it from a group perspective, can I owe myself money?
No.
So I need to eliminate the net effect of this borrowing between the two companies, and that takes me to 20,000. So if I go back to the question, or that answer that we are doing, we could have just have said minus 20 and still gotten the same answer.
That's easy, correct.
You happy, Dicky lady?
100%.
Okay, I'm happy. Guys, someone posted and asked for the evaluation form. I'm not sure if I'm not sure whether Adele posted. There's the consolidation request. There's the recording. I'll ask Adele quickly to put up the evaluation form. Thanks for whoever asked that. I didn't see the name. It was too quick.
It's Sally.
Thanks, Sally.
You're mostly welcome.
Thank you so much. Okay, I've sent a notification. Okay, let's quickly go back to the answer. Or to answer the question. Okay, so we've done the loan and everybody's happy with the loan. Let's look at current liabilities. Current liabilities. There's trade and other receivables. There's let's say trade and other payables. And they don't say anything here about there being trade and other payables between them. So it's the 52 and the 22. don't see anything else that we need to consolidate. So current liabilities, trade and other payables. Trade and other payables will then be 52 minus the 22, minus plus the 22. It will equal 74. Everybody happy?
Yes, sir.
Total equity and liabilities. But we are not yet done. Goodwill we said was 12,000. We calculated that at the beginning. Okay. Then property, plant and equipment is a slightly different matter. Let's just get the basic marks first. Let's say property, plant and equipment. Where's that property, plant and equipment? Will be, you first add, and this is not in the exam, what you do, add the things that you know. Don't, because you are struggling with something, just move on to the next question. Add the things that you know. You do get marks by adding the two of them together. Then you get more marks for eliminating intergroup transactions. But if you didn't add those first two together, then you actually threw away bonus marks. So add the information that is given, add it. Property, plant and equipment is 140,000. Or am I now at the wrong line? And what value must we use for property, plant and equipment? The 140 or the revalued amount? Remember what they said here? They said on the date the property of plant and property of Port Limited was revalued at 200. So I must use not 140 but
200,000.
200. Let's say 200 plus property at carry amount 450. Guys happy? Now we need to deal with that intergroup profit. And the revaluation of that intergroup profit situation. We must eliminate that. Everybody happy with that?
Yes, sir.
So that asset will be the asset that we sold. So it will be, where am I now? Where did I put the, there we go. So there we again have that, we didn't add that amount, the 152. So be careful, Port has got two assets, the assets at valuation and assets at carry amount. So plus 152. Now we need to say minus what? Minus the 20,000 Rand profit that we should not have made in ourselves, and add back the depreciation because we are showing property, plant and equipment at carry amount, and carry amount is cost less accumulated depreciation. Our accumulated depreciation would have been overstated by 2,000, so we need to add it back. Everybody happy with that? Is there something that we could have, that we left out maybe? The investment we eliminated. These lines are so skew.
Charles, the 124,000, is it not part of it?
Yes. No, I agree with you, Makatani. I agree, because I'm looking now at this and I see that it's skew and it should be next to it as well. So yes, the 124, because I also split between the valuation property and the carrying amount. So I agree with you, Makatani.
Okay.
So let's just add it to that, the 124. So I think that this, we've now added all the assets. Then let's quickly complete this part. So we have the 100,000 plus 114. We have 10,000 plus 48. And we have 80,000 plus 20,000 minus 70,000, because we are taking responsibility of the bank account. Everybody happy? Any other questions?
Yes, Charles.
Yes.
I've realized on analysis sometimes they use the retained earnings from the statement of changes in equity. Where is that retained earnings come from? How do you calculate that one? That falls under changes in equity.
It is basically just it's the normal retained earnings as calculated as per usual. The statement of changes in equity is just a disclosure statement. In other words, it shows you the opening balances. So it actually tests that they test you to make sure that you know that the statement of changes in equity will contain the retained earnings balance, because retained earnings is part of equity. So if you don't see that retained earnings value in the question, that is where you need to go and get it. It's from the statement of changes in equity, definitely.
Oh, okay, I'm with you. Okay, thank you.
So sometimes they can give it to you in the statement of financial position, they can give it to you in the information, or they can give it to you in the statement of changes in equity. So you must just be thinking out of the box, where can you see the information?
Okay.
And there we balance. Everybody happy? We'll send this answer together with the explanation to you guys as well. Any other questions that you guys would like to ask?
Yes, Charles. So the dividends, there's no way we have to deduct them.
No, they net out, Makatani. In this case, they net out.
Oh, okay. Thank you.
My question is still going back to the retained earnings.
Yes, Tiki Lady.
As you were explaining, the one from the statement of change in equity, we add also the profit for the year from the statement of profit and loss, then to get the total, then we take that total to go and put it there by the retained earnings. So if we didn't do the statement of change in equity, it won't have an impact?
If you didn't do the statement of changes in equity,
Yes.
no, you don't. You don't have to do the statement of changes in equity. But what Levi's question earlier was actually is that this amount, this 192, could have been given as the closing balance in the statement of changes in equity, and then you had to know to go there and to go and get it in the statement of changes in equity. So that amount they could have given to you either in the information as they did now in the statement of financial position, or they can put it in the statement of changes in equity. I'm not sure whether I'm answered your question.
Yeah, I hear what you're saying, but I'm referring to the assignment too that we had. We had to calculate ourselves that total. It was not given at all. We have to do the statement of change in equity to get the balance of retained earnings. That's why I'm asking.
Okay, so here you wanted to know, here we just took that balance. They gave it to us, and sometimes you have to work it out.
Okay, you answered me then.
Yeah, so in most questions, this is what it would look like. This is a reverse. They asked this question in reverse. So in most questions, you will have your at date of acquisition. You will have your since period, and you will have your current year. So you will have to make changes for since retained earnings. And then you will take the current year's profit and do all the eliminations there, as opposed to where we did it here. You do your eliminations on the profit, and you add it to the opening balance of retained earnings, and then that will equal your closing balance. Because this retained earnings is your opening balance. So you will take that retained earnings together with the adjusted profit, where you've eliminated all your intergroup profits, your unrealized profits, your machinery that you sold with a profit, the inventory that you sold with the profit. You will go and adjust it to that profit. And then you will add it to the opening inventory. Is that better, Dickie Lady? Is that what you wanted to know?
Yes, sir.
Yeah.
Thank you.
So sometimes you must just be very careful in what they ask, because sometimes they can require you to work from here to give the final answer, or they could have actually included everything already and you had to work back. So your answer can move in those directions, and the only thing that changes is the sign of your amount. So where you would have plussed, where you would have added a 2,000, you might now have to deduct a 2,000 to go back to opening. Or if you want to go to closing, you might now have to add the 2,000, if I'm making sense. It depends on the direction that you need to work in. For instance, just to further, because it's a very important question that you're asking, Dikeleni, and that's something that catches people out in the exam. So for instance, if they didn't give this 92 and they gave the opening balance, so say for instance that was the opening balance, the 192, I would not have added this 20,000 in the first place, so I wouldn't have had to subtract it. because it wouldn't have been part of my opening balance in the first place because I made a profit in the current year. The 2,000 Rand, I would have deducted instead of adding it back. So it changed, your signs change, and you need to just pay attention to that. So it's a very important question. So if you guys practice questions for the exam, I know the questions we are doing in class is to cement the principles. So it might not always be the most difficult questions, but it's to cement the principles. If you guys arrange consultations with me, we can tackle maybe a bit more challenging questions, but we are going to do some more challenging questions. There might be an extra class over the weekend, so just keep your WhatsApp group and emails ready. Otherwise, the next class will be next week the same time. But how you utilize the one-on-one sessions and the consultations, that's up to you. So if you've got questions, that's the medium that you guys can use if we don't have enough time in the consultation sessions. Any other questions, guys? Okay, guys, I'm going to stay on a bit more. I'm done with this session. I'm going to email you you've already got the question. I'll just reshare it, and then I'll send these notes to the group. So if you're not already part of the WhatsApp group, just send me your name and the module code and your name, and I'll add you to the group, and then later you guys will receive the notes of tonight's class.
Thank you, Charles.
Thanks, Levi. So you guys have a good evening. I'm going to stay on a bit more. If you guys have got questions, say for another 3 minutes, and then I'll log off as well.
Okay, Charles. Can I just ask about the analysis? What is the main point of analysis?
Sorry, Levi, I'm talking to myself here. I forgot I muted.
Oh, okay, sorry. Just
So
to understand deeper, and I know how to do the.
Yes.
Okay, sometimes I do get off, sometimes I do get it right. But what is the main point? What are we trying to achieve besides pulling out the values of the NCI? Or is just the main point?
Yeah, I think the main purpose of the analysis is 3 parts. The 3 parts is to calculate the possibility of goodwill, because you need to have the percentage, the 75% or whatever percentage the parent has. So the analysis, first and foremost, is a calculation. It is not a required disclosure for any of the financial statements. So that is the first thing I need to say. So the analysis is purely a calculation, but it's a calculation that is structured. So it shows you what your goodwill can be. Okay. Because you've isolated the parent's share, and then it calculated the NCI, second part, and it keeps track of the NCI throughout. Thirdly, remember, the parent does not share in that retained earnings. The parent cannot share in that retained earnings, but it can share in the since date of acquisition retained earnings. So anything in the since date of acquisitions can be added to the group. And we've added it to the group. And then we were in a position to add the NCI. So definitely a very structured way in calculating, if you understand that it is just for those purposes. It is not a financial statement requirement. It is only a that assists you in doing journal entries and all of that.
Okay, I'm with you.
So yeah, it purely serves a calculation purpose.
No, okay, thank you, sir.
Guys, I'm just seeing that some people are saying that they're not in the group. Remember, you need to send the request to that number. So let me quickly put that number up again. Send me a WhatsApp, and then I'm posting that number in the group chat. Please send that request to that number. Then I will add you.
Okay, thanks, Charles. Good night.
Thanks,
good
Levi.
evening. Cheers.
Good evening, you guys. Guys, then I'm also gonna go move on to the next session. I've got another session after this one. You guys must have a good evening, and
Yes,
then
Charles.
yes, Sally.
Before we go, Charles.
Yes.
Before we go,
Yes.
I asked for the link for evaluation, but nothing so far did we get. So I don't know for today, and we not
Sally, unfortunately, I've also
evaluating this.
I've sent Adele a link, a request on a meeting, but I think she's in another meeting. And I've also sent a WhatsApp. So
All right.
if you guys want to say something about the about the session, you're welcome to comment in the chat section, whether you found it helpful or what, if there's something else that you would like that you would like us to include or anything, you can give that feedback in the chat section if you feel like doing it. But I'm sure the link will, I'm sure the link will be ready next week.
Okay. Can I make one more request?
Yes, Ali.
Can you please forward us today's notes? I mean the question on the group.
Yes. After what I normally do is after my next class, I wait for everybody to send their names and module codes to the WhatsApp group. I add them to the groups, and then I add the information. So you'll probably get it. You'll get it before 11 tonight.
All right. Thank you.
Charles, do you cover only the FSC, or do you cover other modules? Because you say the module code, like, I don't know.
Yes, I cover FAC, MAC, and AUE.
Oh, okay, thank you so much.
100%.
Oh, also AUE. Okay, cool.
Yeah, AUE 3702 and 3701.
All right. I'll send you a message now.
Thanks, Sally.
All right.
And Charles, I did last week. You didn't add me. Please do add me tonight, please.
Apologies for that, Dicky Lady. Dicky Lady, didn't you phone me?
I even phoned.
Remember, but then now I remember, because I was really sure that I remember your name. But remember, I asked you to send me your module code, and I didn't receive that WhatsApp with the module code.
I did send it. You'll get it.
Okay, just send me a reminder then, because it might have gotten lost between all the WhatsApps. There's over 70 students on that WhatsApp number.
All right.
So please just send me a fresh message, and then I'll add you.
Okay.
Thanks, Dicky Lady.
Good night.
Good night, guys. Have a good evening, and then I'll chat to you guys over the WhatsApp groups.
Okay, thank you, sir.
Thanks, guys. Bye-bye.